I don't know if I think you're mute. I don't know.
Well, hello there.
Try again.
Man, that was such a good intro. Like I had so much energy. I'm like, why is Alex talking?
You look inspired.
Right. Welcome, guys. Welcome to today's live trading room. We got a very, very exciting session for you guys here today. We are going to, not only do we have the original giveaway, we also, we're celebrating the Fiverr's 8th anniversary. So we have for the next, I believe, 24 hours or whatever. I think it's like 24 hours. We have the giveaway going out where we have the 10% discount on all the programs, and we are giving away a massive amount of challenge accounts for you guys. So all you have to do is you have to go into the link in the description below. You also see it in the scrolling text below me, thefivers.com/8th anniversary. And last but not least, we have Gil Ben-Hur, the guy, the man that founded the Fivers 8 years ago. And he's going to talk about the future of the prop firm industry. So very, very exciting episode. I know a lot of you are very interested in that. And yeah, please do not spam the comments today, guys. This is... you don't have to.
People are getting a little bit better with it, to be fair.
Definitely.
Yeah.
All right, guys. Well, how are you, Alex, Saul? What's up?
Fantastic.
I'm good.
Took a couple of L's today. I'm not gonna lie. I'm probably, like I said, I'm probably marrying a little bit of a bias on gold continuing up, and because I'm being a little bit more aggressive with the risk. The stop losses are a little bit closer, so they keep getting stop hunted, or they keep just getting hit. But we'll see what happens in this session. I may end up taking another loss very soon, but we will see. What about you guys?
I'm sure all the market makers are looking at your charts, Alex.
They are. They know that on the simulated high stakes account is.
They know where your stop losses are, and they go and grab them.
Yeah, actually, I heard that the Bank of England, they have like notifications on their channel, and they go right away as we go live. They go on and like, dude, guys, Alex is long on gold here. We gotta take out the stops, and so that's it is what it is, Alex. When you're this famous, it's
just like
getting
up there with ICT.
That's just
getting up there with ICT.
You know what? Like you know what? I'm getting like a little bit tired of us talking about ICT. It's
no, you don't like it.
I'm sure. And I'm sure there's a lot of people in the comments who actually trade ICT and respect him. And I think I want to be clear with this. Like this is nothing against him as a person at all. Like we're just talking shit, like with the strategy and everything. If you're trading ICT and you're profitable, congrats, that's amazing. All the best to you. And with that said, let's take a look at your
I think Charles is actually in positions. I'm in a position. So today, even from this morning, I was long gold. I was actually long gold. Started off this morning long here. I added a little bit here. Notice that big candle. My stop loss was just under here, so it actually took my stop loss, closed above the EMA, so I decided to get in again. I'll show you what's been going on. So you can see here some of these positions. So I originally bought here, expecting just to take off and continue up to break the top of this higher high. Added a little bit, ended up taking all of the risk off. Notice that this pin bar basically just took all of the liquidity down this area and instantly reclaimed back the EMA. So I got back into the position, which you can see, which was right on the EMA here. Basically held it for majority of this morning. So through all of this price action, held it. Saw that it was finally held as support and was continuing up. I thought I'd leave it. Came back down. Took took my stop. My stop was originally under this pin bar, but as soon as I saw we were going to get there, I just closed it anyway. Totally recovered back above the 200 EMA on the 15-minute time frame. So I decided to get back in with a little smaller risk than what I've been putting on, and taking it back up to the high. So the idea is the same, just it's a little bit tricky with the price action. It's coming in, it's hitting certain areas and then continuing the way that I think it's going to go. But we will see what happens in the rest of the stream. I could come back down, hit these stops and continue lower, and I could just be totally wrong on this idea and I just read the market wrong. Or the market continue further up, it's just being a little bit stubborn, and it's just stopping people out before it continues up.
There's some advice in there, Alex, for you.
The market makers has spoken. That's where the stop loss is gonna get. Okay.
We will see. We will see. My stop loss being down there, that's not a bad stop loss. Depends on what time frame you're looking at, I guess. But yeah, it's not a bad stop.
But I do sense when you describe this trade, I do get a sense of you're not overly confident here, and
well, I don't know about what's overly confident. I'm definitely not overly confident, but
no.
I would say,
much better, but thank you very much.
No, it's overly confident. It's probably not the right word. You've been stopped out twice. The idea is still there in my eyes, but when you've been stopped out twice, you've got to take a little bit of either stop trading or just take a little bit of risk off it. So I've just taken risk off. I still think the idea is intact. On the 4 hour as well, you've got these 200 EMAs. You've also got a real nice support resistance zone, and it's just hitting that zone and then getting rejected back. It's getting rejected. So I can still see we've had these nice pushes up, these big candles pushing up. So there is momentum towards the upside. So I'm just trying to get with that momentum. And if I'm timing it right, that goes to show, I don't know. I could be timing it. I could be a little bit early, or I could be just timing it totally wrong. But that's what I'm thinking. And if I'm wrong, my stop loss will probably get hit too. But that's me.
You know, like I'm trying, because I'm getting a lot of requests on gold, and I'm trying to see something here. But I think you know, I'm at the point where it's like, yeah, gold is not for me, because you know I'm looking at your chart, I'm looking at my chart, and I'm trying to get the same levels, and I can't see it. It's just, you know, I just can't see it. So I think this is a good example of where like some people are just better in some conditions and some market structures than other, and I think gold for me is just totally just messy. I don't know, man.
Yeah.
I
yeah. What about you, Sal?
I'm trading Euro USD. I'm actually in a little drawdown. I'll need to do some fixing over here. I'll show you. So, you know, my analysis on the from the dailies, and I'll zoom in a little bit, and the hourlies hasn't changed. We mentioned this yesterday. We had a little bit of reaction of this demand from the dailies. We're reacting to that, but on the hourlies, we see the reaction has been a slow reaction. We have this compression over here, this slow movement towards what it looks like a potentially selling area. So I'm trying to build some short positions, but just on the 5-minute chart and 1-minute chart, we kind of building a little bit of momentum to the upside. We are right now testing. This is the area where I'll be willing to, you know, if we go above that, I'll need to get out. Okay, I'll need to close my trades if we break above the key supply or the key selling area. So I got in anticipating a reaction of the resistance back here, but it just broke up, retest the breaking area, and continue higher. So now I'll need to decide if I you know, just close these trades for a loss, or I do some fixing techniques to, you know, to make this loss smaller, or to completely fix it and get out of the trade or the position at break even. So that'll be my my session. So I have 50 minutes to do that before Gil joins, and I'll need to jump on a call. So let's see if I can fix this bad trade.
A lot of people are saying the stops on gold have to be bigger. So maybe I gotta increase the stop size. I've traded gold a little bit. I'm quite enjoying the volatility, especially with other pairs just lagging behind and being quite boring. The gold has got that good volatility. We'll see if maybe given a little bit more room for the trade, a little bit bigger stop losses, maybe I should try that out on gold. What about you, Jonathan? What are you looking at?
Right now, I'm actually looking at the something completely different. I'm looking at the Bitcoin dominance chart versus the altcoin dominance chart. And if we can pull up my screen here, and I know this is not, because honestly, like my forex positions are just looks like shit. So I don't even want to show them. So here's another chart for you guys. So you see here, you got two lines right here. You get a blue one and an orange one right here. And if you go to on TradingView, you can type in BTC.D, and that's the market cap BTC dominance in percentage. Basically means how much of the crypto cap, the crypto, what percentage of the money in crypto is in Bitcoin compared to altcoins. And then if you type in, you can press the plus here and type in others .d, you're going to get the altcoin dominance excluding the top 10. So basically altcoin dominance. And there's something in the crypto market called the altcoin season, right? We all know about the altcoin seasons, right? Yeah. And in 2017 we had a lot of altcoin seasons. Basically the whole of 2017 was an altcoin season. I'm sure some of you remember when I talked about my beautiful strategy of trading altcoins in 2017. Basically what I did was I went on Bittrex, the biggest exchange back then. I looked at the biggest gainers of the day and I went all in. And that made me money all through
made everybody
2017.
money.
Oh yeah, it's insane, right? So back then we had like insane altcoin seasons where we had weeks and weeks and weeks of altcoins just absolutely exploding several 100% to the upside. Now we don't really have altcoin seasons. I mean, people are waiting for an altcoin season, but I mean, let's face it, we're not getting altcoin seasons anymore. But what we are getting is altcoin windows, and I want to show you what that looks like and how you can try to predict that using the BTC dominance and the altcoin dominance. So a good example would be, let's say, this for example. So the very low here on the altcoin. On the Bitcoin dominance, so that's the Bitcoin dominance, right? The orange one, and then we have a top in the altcoin dominance. So these are inversely correlated to each other. So when there's a bottom in the BTC dominance, there's going to be a top in the altcoin dominance. And the way you can try to predict this is by looking at a break of structure on the BTC dominance. When there is a downtrend, and this is pretty crazy because this is not a tradable asset, but it moves in trends, and the market structure is very similar to a tradable asset. So you can see right here where you have a downtrend on the Bitcoin dominance. I mean, first signs of a break of structure would be here, but then we kind of confirm the break of structure somewhere around this area here. But this is on the daily. If you manage to go in and look for early clues of like changes in behaviors of the Bitcoin dominance, you might expect the altcoin dominance to drop. And the same thing then, of course, when the Bitcoin dominance starts dropping. So here, for example, is a good example. This is a range on the Bitcoin dominance. And when Bitcoin starts ranging and we break those lows, right here, that starts a pretty nice run on the altcoin dominance. And this is where you have an altcoin window. That's where altcoins will outperform Bitcoin. So if you're in Bitcoin, you know, and you see that the Bitcoin dominance is falling, maybe you want to like take some of that Bitcoin and start trading altcoins using this chart right here. And it's actually quite reliable. We can look at, let's say, So the this low area right here that we talked about, so it could be like the October, yeah, around this area right here. Now if you look at this level, that's the let's say the 1st of September 2023, and you can look up any altcoin, and you will most likely see that from this point right here, you'll have a big move to the upside. So that's just a tip that I want you guys to keep in mind if you're interested in trading altcoins, or now with the Fibers we have Ethereum listed, so we have Bitcoin and Ethereum. Now you might want to look at switching between Bitcoin and Ethereum based on these two dominance charts.
I didn't even know that these charts existed, so very interesting.
Yeah, they're pretty cool.
Yeah, man.
So they're both the BTC dominance here, and then others, and then here you combine them, and then of course you can add Bitcoin USD. You can look at Bitstamp. So we get that right here. Now of course you have to kind of play around with the way you let's see, move to new pane. Yeah, you kind of have to play around with the way these are scaled to make sure that they kind of fit each other nicely. But the is it teal? You call this color teal or like light blue?
That looks like a teal color.
Yeah, so you
Tealish
see here,
color.
Yeah. So you see right here, yeah, I have to do some analysis of my own here to kind of like give you guys a good understanding of this. But you can add Ethereum, Bitcoin to the chart, and you can see what the correlation is, and then find patterns in this. So looking at the dominance and trading Bitcoin and altcoins based on that is actually quite a reliable strategy.
Let's have a look what Soul is in trades as well. What are we at? You're selling on. Soul, is there a way that you can? I lost your microphone. Is there a way that you can scale in the chart so we can see the chart a little bit?
So we're right at the selling area. This is the purple rectangle right there. Let me zoom in a little bit now. So that's a 5-minute chart. Then on a 1-minute chart, we're forming this kind of that divergence. Okay, we're kind of slow down, approaching to that selling area that I was looking to sell. That's what I added here, 2 selling positions, and now I'm looking for the selling pressure to come in. So I'm looking for a reaction. Now this is a good start. I need this candle or the following candles to have a little bit of continuation to the downside, and I place my stop losses, my take profits at previous low, which is down here. At that point, I should be in the position slightly positive, but at least I fixed these previous entries. As long as this doesn't turn, strongly with a strong momentum to the upside, I'm good with the position. If I start seeing price action just picking momentum to the upside, I'll need to close the trades. But as long as we keep, kind of forming these higher highs, but we can see there's kind of a divergence here. There's not a lot of strength behind each one of these highs here. So as long as we keep that divergence in place in the 1-minute chart, I feel confident in the setup. If this starts picking momentum to the upside, then I'll need to take the loss.
Do you use the dollar index to help with confluence? So let's say if it's a support resistance on the dollar index, would you then look at going long and short on the euro?
No, to be honest, I very rarely look at the dollar index. Also, I believe more than 50% of the dollar index is based on the euro. So most of the times, the dollar index and the euro USD, they look like a mirror. They're highly correlated. So there's no point on looking at the dollar index for me. But did you see that price action that there was a bearish candle, and we saw real time the strength and the buyers coming and pushing this market up, to the upside. So that gave me signals of, okay, the buyers want to keep pushing this market to the upside. So that's kind of the price action I'm looking at when I'm trading the 1 minute charts, seeing real data and real movements of the market to understand where is this market going to go.
Nice.
Yeah, so
Mhm.
not really look at the dollar index. Okay, so that's the
And
strength I don't want. Yeah, so now I need to like reduce size on my position. I don't want to hold all this exposure. And then we're forming a new high. I don't know if there's like news right now or stuff like that, because that's like a volatile movement. So we had a high, no follow through. So we kind of respecting that divergence, but I need to be careful how exposed I'm in the position. So I just reduce a little bit of exposure. I'll keep reading price action, and then I'll adjust accordingly.
And Magnus, tell everybody that everybody for some reason thinks the giveaways are not real. So Magnus was the winner from yesterday. He can tell everybody that he's got his account, and I hope he's already trading it.
We have an interesting question here. Yeah, exactly. This one, volume. I would like to hear your take on volume in the Forex market.
You look at size of candles, though, really, don't you?
Yeah,
you look at the size of how fast the candles move.
You can look at volume. If you go to, I don't think there's in MetaTrader, but if you go to TradingView, you can put volume in, and you'll get the volume of the broker that it's providing the liquidity. And if it's a large broker, you can guess is that the volume is relevant. The thing is, with some practice, most of the indicators or tools, you can spot them with your eyes. So as Alex said, it's very easy to spot where volume is low and where volume is high. You can see the consolidations, you can see the slow, the low bars, and to understand there's low volume in that moment. And if you've got an expansion, a breakout, large candles, obviously there's large volume behind. So it all depends if you're trying to look for like extra confirmation or what you're trying to accomplish with the volume indicator. But for me, and with some practice, almost all the indicators out there or the tools out there, you will be able to spot them with your eyes. So
I want to show you my screen here when we talk about volume. So
go ahead.
I'm on TradingView here, and this is the 4-hour on Euro USD. The volume bars here tells me nothing. They're like, this tells me absolutely nothing. Maybe I have to go into the lower time frames, but looking at Euro USD, the 4-hour with volume, this is on Oanda, right? So it should be quite a big broker. This tells me nothing. However, on Bitcoin, look at the 4-hour, very, very different volume bar right here. Very, very different. Here you can actually see clearly that on this move right here, you have a very, very strong uptake in volume and this part right here. So what I'm thinking, like in the Forex market, and we can look at Euro USD, we can look at GBP/AUD, volume it all looks the same. And I think it has to do, like, I remember a couple of years ago, I tried to incorporate volume into my system, and I saw that it makes no sense for me to incorporate volume in Forex trading. Maybe on the lower time frames, we can look at this one here, for example, on the 15-minute. Yeah, maybe on the lower time frames it makes more sense. I mean, because that's, I don't know if you're familiar with the Dow theory, but volume confirms price. So here you have obviously consolidation, comes in, uptick in volume, and that's kind of like when you start that uptrend. So this uptrend, I guess, with the consolidation and increased volume, it kind of confirms it. But in the crypto market, it's much more useful in my opinion.
I thinking, sorry, Jonathan, I didn't know you finished.
No,
Carry
go
on.
ahead.
Sorry. No, sometimes looking at volume bars at the bottom, sometimes quite hard to look at some people look at divergences in the volume and stuff. I find that actually quite difficult, but volume profiles where you can see certain levels and things like that in the chart, where you see on the side, there you go. Now you can see where the highest amount of price action has actually happened on the chart, and that can give you great profit targets, great areas to put maybe under, like stops under those areas as well. And Yeah, so that's what if you like using volume and you think that this tool, I think, is a lot more efficient to help. But then again, that's just what I prefer.
You know what? Actually, this makes much more sense. So what I like to do, it was a long time ago. I used the volume profile. I actually did use it a lot before, but what I like to do is increase the row size here, so it's like smaller candles. And yeah, I guess this makes much more sense. But then again, it basically what this shows is, again, like everything is in price here. I mean, you can just put a box here on that one, then put another box on let's see, on this one, and you see that it's just, you know, decent horizontal levels going through here.
Yeah.
So it makes sense, but in my opinion, you get the same idea from adding horizontal levels. So, but yeah, this is, I guess this is a more useful tool than the volume bar at the bottom. I wanted to show you guys something on DXY. We talked some about DX in the comments here, and one way I'm looking at the dollar currency index is it's basically a way to get a sense of the risk situation around the world. So when the dollar currency index goes up, it means that the American dollar is showing strength, and that's usually what happens in a risk-off environment, because the USD is a safe haven asset. You get a risky world situation, you want to flee to a safe haven asset, which is mostly USD and of course other currencies. So you'll see that the dollar currency index will be going up when there's a risk-off scenario. And what goes down in the risk-off scenario? Well, that's Bitcoin, right? So here you have the dollar currency index and Bitcoin. So Bitcoin obviously orange right here, and they follow each other very nicely, very, very nicely. So first of all, you can look at COVID. Okay, so this is COVID. It's insane, right? It's an insane move to the upside on the dollar currency index, and that's like the death spiral on Bitcoin. This is where everyone got stopped out, right? Everyone gave up down here. But then you have a downwards trending market on the dollar currency index, and boom, this is where the bull market happens on Bitcoin. So the dollar currency index for me is a very good way of getting an indication of what the risk sentiment is. So you can look at like every top in the dollar currency index will be a bottom on Bitcoin, and every bottom on the DXY will be a top on Bitcoin. So that could be a good to see here. The recent top on the dollar currency index in October last year was the bottom for Bitcoin here last year. And then of course you had the consolidation period on Bitcoin here, and I would say that this is also where the dollar currency index started consolidating. And yeah, so it kind of makes sense from the higher time frames to use the dollar currency index as a risk on sentiment indicator.
Some people are asking some questions. Apparently I'm doing gang signs. Yeah, I'm still in gold. But I've seen this, I've been having this all day, you know. It starts to show momentum and then just gets pummeled afterwards. I've been doing this for the last like 5 hours, you know, so I'm just sitting and waiting to see what actually happens. Now some other people said, when is Gil coming on? Obviously Peter from the Scruffy Squad. Big up Peter. He's always here, always supporting. He's going on at 4 o'clock, and he'll be talking about the future of the prop firm industry, because it's super important. Obviously, everything that is going on now in the whole industry, new players coming in, new firms, people are like not brokers, prop firm owners at the moment are opening up new firms and loads of different stuff. Red flags, green flags, nobody really knows. But Gil's going to open the floor up for some questions. And if you guys want to know some of the inner understandings of the firm and anything like that, you can always ask him and he'll be able to talk to you about it. I got a question for Sal. Can you share any lessons learned from past trading mistakes and how they influenced your approach to the market?
Yeah, I can tell you the one only mistake I needed, the one only lesson I needed to learn that changed everything for me. It was in 2020. Jonathan mentioned the COVID, and that's the year I lost like 14 grand in a trade.
Oh,
It was
oh,
devastating. It
Oh,
was
wow.
devastating. It wasn't prop
Wasn't
firm's money.
fun.
It was my money and the investors' capital, and it was a painful lesson. And it was because I
Oh,
didn't
man.
respect my setup and my rules, and I was just adding into a position that was going against me. And that's the moment I decided I will not go. I'm not going that way ever again. So, like right now, I'm in a losing position. Okay, I'm trying to fix it, but if I don't see a way to fix it, I'll just take the loss. I'll leave another day to come back and to trade, and I'm not going ever again into adding into positions and not respecting my stops and not respecting my setups, and that was the hard learned lesson I needed
I
to.
feel like it's the story with pretty much all of us that any big loss, always in that story, it's I added to a losing position and just kept adding it
Yeah.
and adding it. It's just
Yeah.
and it's a bad habit to get into as well.
No, and
So
it can be moving your stop. It can be revenge trading. It can be it can be
For
many
me-
things. But
For me, it was definitely revenge trading.
Yeah.
I think I had like my biggest loss trading on my phone on crypto futures. Like I took that on crypto exchanges. Like you decide what you have isolated leverage, right? So you decide the leverage of the specific trade you're gonna take, right? So you have a slider, almost like a casino. It's like, do you want to take this trade like on 2x leverage or 125? Well, fuck it. I'll do to 125. Why not? Like I look at the profits and I'm like, I'm gonna make like 20, 25 grand on this trade. Why not? Better than 250 or something. And I took that slider up to 125x on
Whoa.
Binance, I believe, and boom, it's a stop out. I'm like,
Nah,
well,
2 seconds.
that's a big loss. But what if I do it again and I win? I'm gonna make that back. And I did. And then I did it again and again, and until my whole account was gone. My whole account, like in like five trades, whole account was gone. And yeah. I remember like I was doing that on my phone. How stupid is that?
It's not actually that stupid. We've got loads of traders that are absolutely savages on their phone. Absolute
that's true.
savages at trading on their phone. So it's not that. I think when we could even look at it today, like marrying a bias and just continuing, like getting that tunnel vision of that is what I think is going to happen, and trying to put that onto the market. A little bit what like I'm feeling today, but I had the exact same thing trading Ethereum when it was overextended in 2018. It was either 2018 or 2020, and it was 2018, and it was overextended, and I kept on shorting. And by adding, in Binance, obviously when you add to it, your position moves because it's a netting account. So basically your average position moves. And eventually I just got liquidated, and it was, I don't know, I didn't really feel anything, but I felt kind of bad. It was like a weird feeling. And I lost quite a bit of crypto from that. So but it all happens from averaging into positions. So guys, don't add to losing positions, especially if you haven't worked out the risk beforehand. I've got a couple of questions I want to ask you, Jonathan. So can you elaborate on your use of EMAs? I see that you use a fib for entry, but what about the EMAs? What are they used for? Great question.
Okay, so the EMAs are... Okay, so it's all about like when I created my system, when I created the system, the only reason I'm using the EMAs that I'm using is because I saw that every time I had an entry trigger happening on the 20 EMA, it increased the risk of that entry trigger being like a good trade. So I get an entry trigger here, right? Like that's, you see, price comes down and hits a level. I got my entry trigger. But if the EMA, the 20 EMA is down here, a lot of times, or more often than not, you'll see like a wick down, hit the EMA, and then continue higher. So when I saw that, I figured that, you know what, like let's incorporate the 20 EMA into my system and let's test everything again. Let's look at the statistics. And it showed that the win rate was slightly higher when using the 20 EMA in the 4 hour. So that's basically it. Like I created the system and I added all these. I started with a break and retest of a horizontal level, like a break retest of a horizontal level right here, and then I just started adding. I think I added like 100 different indicators and tried everything out, and I found that just the 20 EMA on my entry time frame just increased the win rate slightly compared to lots of other indicators, and then I added more. So basically what I'm using it for is I want the price to be above the 20 EMA in the 4 hour if I'm going long, and below it if I'm going short. And it's basically just a part of my entry signal. If I get the entry signal on the 20 EMA, then that's a good signal. I don't know if if that makes sense, or if that's what the answer you wanted, but yeah.
It's finally bloody doing what it's supposed to do, man. Gold, look. Finally actually moving in some sort of direction.
In your
stopping
direction,
your
man.
boy after stopping me out twice.
Oh man.
And watch this now, it's going to be a massive pin bar, and now it's going to stop me out again. Watch. Let's see what Saul is doing.
I'm still here. I mean, we're still in the selling area, in the supply area. So I'm looking for reversal points within the area, and hopefully we can get a little bit of movement to the downside. I'll be break even with the position I've got left.
Jonathan, what about your performance of your system? Does it exhibit a high winning ratio or a high risk to reward ratio? Actually, both, no?
Nah, I think it would be average on. I think it would be like average on both. I actually did a backtesting session yesterday morning. I'm gonna show that one.
Let's have a look.
Let's see. So I did backtest in January. So what I do at the end of every month, I go through my trading journal, and I also backtest the month. So at the end of January, I went through my trading journal, looked at all my trades, and also backtested January using the system to make sure that I'm in line with the backtesting results. I want to make sure that my live trading is close to the backtesting result, which is not even close this month. I made like the backtesting shows that when swing trading, I had 10 good trades with a 70% win rate and 5.3 R. Now to me, that's very good, right? But my live results shows that I'm taking 30 trades. So I took 20 more trades than I'm supposed to be taking. And my win rate is, for January, was like 33%, and around break even. So not very good, live performance. But yeah, this is the backtesting result. So usually when I see that in backtesting I have 70%, that would probably mean I'm closer to 60% live. So looking at my journal, I would say I have somewhere between 50 and 55% win rate. I gotta look at what the average R is, but it's not super high. It's not insanely profitable, but I'd say it's somewhat reliable and it's consistent. And I like, I like the fact that it's consistent, have consistent month instead of having like insanely profitable months and then some, very bad losing months.
Mm.
And it's quite simple. It's a swing trading system. It's based on the break and retest. It's a quite simple system. I think
I like it. It's a nice simple system, as you just said.
Yeah, but I think if I know I could probably make it much more profitable, but I'm not sure I want to, because it's a lot of work to go down that route again to start testing everything. Because I remember in the last year, I manually tested, I believe, 800 trades, right? Over a period of like 5 years. And that took me like a couple of months. So it's a lot of work. Like it's a lot of work to refine a system.
Yeah, a lot of collecting data, and
yeah,
it's difficult. It's difficult to hone in and on the edge, because sometimes you can have a system that just by changing just a simple things can actually turn it into a winning system. Like somebody just asked, do you take things to break even or stop loss? Now I know that you trail your stops, and for you that works. Now for me, I've noticed every time that I trail a stop, it actually does the opposite. I get stopped out and then it goes my way. That's why I have a fixed stop loss and a fixed TP, and I don't generally move them. I've tried moving them in the past and I get stopped out. So that's why the loss is mostly from when they hit the stop loss. But how do you feel about that?
Yeah, man, so again, I think when you have your system, you have different components, right? And I think, one component is the entry trigger, and then you have the stop loss placement, and then of course the TP placement. And those are like 3 parts of the system that have to have like their own, be adjusted in their own way. And then you have the 4th component, which is, risk management and trade management, and that has to be tested as well. So you have to go through all your trades and look like what happens if I move my stops to entry every time I hit 1R. Like, is that going to be profitable or not? And then you look at the statistics, and for me, I've seen that some months I see that the more I manage my trade, the less profitable I am. Most of the time, it's better to just set and forget. And if I do that, it'll be, most of the time, the more time I spend managing the trade, the more problems and the more problems and mistakes I make, I think. So I do trail my stops, but I probably shouldn't.
Yeah. Let's have a look. Hey, we're close to 300. So soon we got about another 15 minutes, and the big boss, the founder, is coming in to speak about the future of the prop industry, which I hope you guys are getting all of your questions and stuff ready, because super going to be super interesting. Can you share a specific example of a trade where your emotions influenced your decision making and what you have learned from that experience? Wow, these are some in-depth questions from
this guy is good.
Yeah, you're really here to learn. I love that. Really like that.
Yeah,
I think well, go on, you go through what you think, because I've got an idea of what I'm gonna say, but
well, yeah, so I guess we could take this trade that I have currently open, I'm constantly looking at this, and I've had a couple of losers in a row now, and I really don't want to get another one. And I kind of have that feeling, like I don't want to get another loser, and this really looks like it's going to be a loser. So maybe I should just close this one. And I know from the testing that I shouldn't. I shouldn't, because I have the stop loss up here. I know, the reason why I entered this trade was because I expected, this to be resistance, and it's still acting as resistance, even though kind of looks like it wants to break out. And that's just purely based on emotions, I believe. So if I close this trade, a lot of times it's just going to go straight down.
Speaking facts, true realistic trader facts right there.
Yeah, but I'm still not confident.
People don't talk about a lot of the real feelings around trading, and I think there's not one time, like a specific example that I could probably give, because emotions are a part of trading, I think, all the time. And it's about when you come into the office. Let's say, for instance, you come into the office and you see a setup, instantly you want to get in. Like you got that FOMO. You don't want to be sidelined, so you get in. Maybe it's before the market's open. Loads of different things. So emotion is going to be a part of your trading journey throughout the rest of your life. So it's just about understanding where you are emotionally in that particular time, and then mitigating any bad emotions that you're actually feeling. So that's what I would say, because emotions are never going to leave you. What about you, Sal? Because you've given me loads of advice on this in the past.
I missed the question. What's the question?
God,
sorry.
you're not paying attention.
I was on the trade. I managed to, to break even on the trade. So
no way, that's awesome.
Yeah. So the
Nice.
movement to the downside, for the setup, I'm still slightly negative, but managed to come almost break even. Beside removing commissions and all of that. So that's the movement I needed. Now I need to wait for a new setup to to make money, actually, not just to fix the other trades. So what was the question?
Can you share a specific trade where your emotions influence your decision making and what you learned from that experience?
Yeah, so that was
you kind of covered it, no?
Yeah, that was that time. Back in the day, I wasn't very sure what I was doing, or when to add or not to add, why some setups would work, why some wouldn't, and I think that lack of confidence and lack of understanding, that's what made me, add to that position, and that I was full of emotions and full of pain and anger and frustration and everything together. So that was my experience.
By the way, guys, don't forget to like the video. We have different targets today. We have at 100 likes, we're gonna give away one 100k bootcamp by
every 100,
and then
exactly.
Yeah, and then at 200 likes we give away 2, and 300 likes we give away 3. I don't know how many
and
likes
4 and 5. We're probably, I don't know. I'm not checking. What do you think of the best trader from you three? I definitely think we're very, very different traders, and I don't think there is never. Yeah, I was gonna say Sol, but I was trying to get there first. No, you got the big man here, but it's very different ways of trading. I could not trade the way that Sol trades, man.
I think it's a fun question, but it's a wrong one, because I don't think there's. I mean, I know I'm a very good trader, and I know traders who make more money than I do. Okay, and I know, it all in terms of how you measure who's a good trader or who's a bad trader, and I think it's irrelevant who's performing in a certain amount of time, who's better or worse than other one. You just need to be focused more on what you do and your own process, and not looking sideways. So
yeah, that's well put, well said. But I also think, like, looking at your type of trading, I would say that, yeah, sure, like Alex talks about how he's not a swing trader because he can't really, he has issues with staying in trades for too long, so we want to get in and out quick. But when I look at your type of trading, it's scaling in, like it's much more discretionary. And I think having like a scalping approach on the lower time frames, purely discretionary, is the hardest way of trade to trade. Like, that's in finance, that's the toughest thing you can do, in my opinion. I mean, my trading, it's quite easy, you know what I mean, compared to the way you're trading.
So even more, I know the way I trade is not the most efficient way of trading, because I'm very active in the market. I need to spend a lot of time in front of the charts. I pay a lot of commissions when I'm trading, so I work very hard to make the money I make. So there might be other traders with different personalities having a more relaxed way of trading. They're paying less commissions, they're holding their trades for longer, and they're making more out of their their efforts, because I work hard. Your system, yeah, Jonathan, might be a more efficient way of trading. It's just not suit for my personality. I also struggle holding my trades longer or overnight or so, and that's why I trade the way I trade. But that doesn't make it a better system or a better approach to trading.
That makes sense.
What is this price action on gold? Like, ugh.
Guys, actually, I'm thinking I'll leave you guys here before Jill comes on. I'm getting a headache, and I feel like I need to get some rest.
You get some rest, buddy.
Get ready for that stop loss to get hit, where my headache is probably gonna get worse.
We'll take
Quick recovery,
Jonathan.
I'm gonna be listening though, because this is gonna be a very interesting conversation here with Gil. So hopefully, I really hope that you guys stay on to listen. Because
everybody say bye to Jonathan.
Goodbye, everyone.
Bye,
I will see you guys in the next live trading room on Monday, same time.
See you. Feel better, Jonathan.
Yeah, take care, guys.
So Alex, I'm flat. What about your position?
My position. First of all, I gotta sort these. I don't know why I'm gonna have to sort this layout. Let me just sort this layout for us, because I don't know why it's bugging out for us here.
So we've got Gil joining in what, about 5 minutes, 10 minutes?
Yeah. You've got to go in like 2 minutes.
Yeah, I have 5 more minutes. Then I need to jump on the call,
minutes.
and then Gil will join.
Yeah. So I'm still in this gold trade.
Yep.
And it's still ranging. To be honest, I used to trade ranges when I was trading Bitcoin, and I like trading ranges, but my mind just doesn't really. I don't really like trading ranges. I find it super boring. I don't know why. It should be right, like I prefer trading directional moves, continuations of.
Yeah, we all do. The thing is the forex market is intended to range. Yeah. So you might consider going into indices or something like that.
Yeah, maybe indices. We shall see. But yeah, Gil's going to be here in 5 minutes, and he's going to have some very good insights and everything. It's a shame that Jonathan won't be with us to go through and speak to him, because I know he's got some questions and stuff. But let's see what happens on this gold trade. And you're not getting in any more positions now, I'll take it, because you're out. You're leaving soon.
Yeah, I actually, the kind of movement that, I'll share my screen.
Go for it.
This kind of movement, this kind of impulse is what I'm looking during the whole day in order to get in the market. Because after a strong movement like that, even if you go to the hourlies, okay, that's the selling area we marked at the beginning of the session. And you can see the reaction. And on a 1 hour chart, this is all screaming short. So now I would be looking for an opportunity to go short based on the 5 minute chart and the 1 minute chart. The thing is, I'll need to jump on a call, and I'll not be able to manage the trade. But now that we have this nice impulse to the downside established, I'll be looking for resistance areas or supply areas to short the market. But I think I'll need to skip on that, because I won't be able to manage it.
That's the thing about scalping. I feel like one of the thing is that you have to be in front of the screen all the time, and day trading as well. You need to be in front of the screen quite a lot. Whereas Jonathan, he can do loads of other things. He can just sit on a 4 hour, check it every few hours, every day, and he's sweet. It's an interesting. It's just a different way of trading. So I see we've got Gil setting up. So we're just going to add him in 2 seconds.
Fantastic. And I think I'll jump out. I'll need to get ready for another call. But thank you, guys, and see you next week. And thank you, Alex.
Perfect, man. Here he is.
Hey there.
Your sound's a little bit mixed, Gil. Is there a way to sort it out? It seems quite echoey.
How about now?